With housing affordability at 40-year lows, a lot of investors and homeowners have turned their attention to more affordable housing markets. In fact, we see this with a lot of the data. Many of the fastest appreciating markets and markets with the highest buyer demand are in more affordable cities. I'm sure you know this, but there's actually a really big variance in regional affordability. When you think of expensive markets, mostly on the West Coast, like Seattle or Los Angeles, those are some of the least affordable markets in the country. If you look in places like Western New York or the Midwest, or even some places in the Southeast, you can still find places that, in the grand scheme of things, are more affordable. But just because a market is affordable, that doesn't necessarily mean it's a good place to invest or a good place to buy a primary residence, at least as an investment. You have to look at macroeconomic factors on housing market fundamentals to determine if these are good places to invest. And in today's video, I'm going to share with you 9 affordable markets that I think could make great places to invest. But before we get into that, you all know how much I love data. That's probably why you're watching this channel right now. But to get deals, you don't need to do the level of data analysis I do. You actually only need one source of data. That's PropStream. PropStream helps investors find motivated sellers in any market across the US with hundreds of different filters. You can search for both on and off market properties. You can run comps, get in touch with sellers using built-in marketing tools, and you can analyze deals to your heart's desire. When inventory is tough, like it is right now, PropStream is the key to finding your next property. You can check them out at propstream.com/BP. I'm actually going to start with a published list that comes from Zillow. They recently put out an article of the 25 most affordable places to live. And then I'm going to cross-check their data with some of my own data, macroeconomic stuff, to see where might make a good place to invest. But first, we have to look at the Zillow list and just look at their criteria, because there are lots of different ways you can measure affordability. Everyone does it a little bit different, but I think they have pretty solid criteria here. So their criteria is 1, median home price. Makes sense, right? How much does a house cost? Second is the share of monthly income needed for a mortgage. And I actually think this is the best part of the criteria here, which is home price is relative, because we were talking earlier about San Francisco, right? Home prices there are super high. Salaries there are super high. So when you're trying to figure out affordability, you want to compare how much average income is in that area versus the mortgage rate. And that's going to tell you how relatively affordable it is. And lastly, Zillow also considers how many years at the average income in the area would it take to save up for 20% down payment. And when you look at this, they came up with 25 markets. I'm not going to read them all out here, but we'll put them up on the screen here for you. But you will probably notice a couple of patterns here. So I alluded to this at the beginning, but a lot of the most affordable cities in the US are in the Midwest. You see a couple of in Ohio, which is not surprising to me. These are long been known as some of the more affordable cities in the country. But you also see other places in the Midwest like Iowa, Indiana, and Michigan. Gulf Coast and the Southeast have a couple of places, like we see places in Arkansas, for example, Mississippi and Alabama. But it's important to note that not all of the Southeast is affordable. We don't see a lot in Florida. We don't see a lot in Georgia. The Carolinas have gotten really expensive over the last couple of years. So you'll notice that those places are largely missing, with one exception we'll talk about. And then lastly, and I think people often miss this, is that there are places in the Northeast that are more affordable. No, it's not New York City, it's not Boston, but if you look at Western New York, places like Syracuse, Rochester, Buffalo, those are all relatively affordable places. And there are a lot of places in Pennsylvania that are also affordable. So those are just some of the regional trends that you see. But obviously, if you're going to make investing decisions, you need to narrow down beyond just regional trends and actually look at the particulars of every single market. As I said, what I'm going to do is I'm going to just cross-check this list with some macroeconomic data that I've pulled together. And the things that we're going to look at today, it's not a comprehensive list, but we're going to look at population growth, price appreciation, rent appreciation, and the rent to price ratio. If you don't know that last one, rent to price ratio is a measurement of how much rent you can generate for every dollar that you are spending to purchase a property. the higher the number, the more potential for cash flow that you have. And so we're going to look at that one as well. Let's start applying these filters. The first one we're going to look at is positive population growth. And with this one, and really with any of these criteria, like these are just my personal criteria, and you can absolutely invest in markets with population declines. But to me, it's a little bit riskier. You have to take different tactics, and for some people, those tactics work. I'm just using the tactics I like to use, which are long-term stabilized rental properties in Class B areas. So I'm applying my filters here. And for those types of investments, I like to see at least stable, if not growing population. And so for the purposes of this video, I'm going to eliminate any markets with negative growth. And when I do that, it pulls out a lot. It actually pulls out 9 of the 25 markets off my list. And a lot of those come in the Midwest. So Ohio gets hit badly here in terms of population decline. So Cleveland, Akron, and Toledo come off our list. And 2 of those markets I mentioned earlier in Western New York, Syracuse and Rochester, also gone. Then we have a couple other random ones like Jackson, Mississippi, Detroit, St. Louis, and Pittsburgh. Those all come off our list. Just by applying that one filter, we're already down to just 16 markets. Next, I'm going to look at cash flow potential and the rent to price ratio because I personally don't invest in properties that do not cash flow. I am not primarily a cash flow investor. I don't need a 10% cash on cash return, but I need at least break even cash flow. And I'll only do just break even or a small cash flow if it's in a really good area with a strong potential to appreciate. If it's in just a mediocre neighborhood, I would have to see much higher cash on cash returns than that. What we look at with rent to price ratio is I need to see something with at least 0.5%. And remember, the higher, the better. And if you can find a market where you're averaging, let's say, a rent to price ratio of 0.7, 0.8%, then a lot of deals, even on market deals, as is, might have the potential to cash flow. When you look in the sort of 0.5 to 0.7 range, there are still cash flowing deals in those markets. You might have to do a cosmetic rehab. You might need to go into a Class B or Class C area, but those are absolutely possible. When you get below a 0.5 rent to price ratio, it's going to be very tricky to find cash flow. And so I'm just going to omit markets that don't meet that 0.5 cash flow. When I apply this rent to price ratio filter, we're going to pull out, let's see, 1, 2, 3, 4 more markets. Des Moines, Iowa's gone, Harrisburg, Pennsylvania, Grand Rapids, Michigan, and Louisville, Kentucky. So that brings us down to just 12. We've already lost half of our markets just by applying these 2 filters. And I'm going to next look at rent growth that outpaces inflation. So interestingly, on this list, all 12 that we have left actually all have positive rent growth, which is a good sign. There are just a few markets in the country right now that are seeing negative rent growth. These are markets that have an oversaturation of multifamily housing. These are places like San Antonio or Austin, Texas. Most places are growing, but inflation's still high right now. It's at 3.5% as of this recording in mid-June. And so we want to see rent grow at least keep pace with inflation to maintain our spending power. And so I'm going to pull out any markets where rent is growing slower than inflation, which pulls out 2 more markets, Memphis and Baton Rouge, which leaves us with just 10. And then lastly, I'm just going to look for some outliers in price appreciation. Even at this point in, midway through 2024, home prices have gone up this year, 4 to 5%, depending on who you ask, which is more than average. So I'm going to look for markets where appreciation is at least about average, and most of them are. So there's actually only one market that I'm going to pull off now from this list, and that is Birmingham, Alabama. It was just 1% growth, which isn't terrible, but again, it's not keeping pace with inflation. And when you look at the average of the other markets on our list, it's actually above 4%. And so it's just a little bit different than the other ones. And so if it were me, I would focus on markets that were growing a little bit faster. And so that leaves us with our list. I have now 9 markets that meet my fundamentals criteria and are relatively affordable. And I should have mentioned this at the top. When we talk about relative affordability, The home prices we're talking about here on this list range anywhere from Cincinnati, which has the highest on the list, $280,000 is the median home price, down to $207,000, which is the lowest on our list, which is Wichita, Kansas. And those still pretty big numbers, but given where we are right now with the housing market, the median home price in the country is over $400,000. So when we're talking about somewhere in the 200,000s, that is relatively affordable compared to other markets. Now, I want to make clear that many of the markets here that I've omitted can still be strong investment opportunities. They may be great for flipping or short-term rentals or even full rehabs or BRRRRs. The purposes of these videos are to help you narrow down this big list of affordable places to get to a more manageable list that you can consider and do a deeper dive on. So you may not agree with these criteria. And of course, I am looking at this from my own lens, from an analytical perspective. I don't have boots on the ground here. I haven't fully researched any of these markets. And if you do want to check out these markets, I really recommend you do a deeper dive. So those are a couple of caveats, but these are all solid markets to consider. But I want to share with you all, before we go, just a couple of highlights from my findings. So number one, Oklahoma City looks really strong to me. It has the lowest unemployment rate at 3%, super low, and it has the fastest growing population. So that is just really overall a strong market. Never been. I don't know that much about it, but just on paper, it looks pretty good. Second, Buffalo has seen the fastest appreciation in the last year and very strong rent growth. And even though that's not an indicator of future performance, those are backward-looking metrics, it is worth noting that it is the fastest growing, and you should do some more analysis to figure out if you think that is going to continue. Lastly, Augusta, Georgia, and Columbia, South Carolina both have the best cash flow potential because they have the highest rent-to-price ratios on our list, both with 0.61%. So if cash flow is a priority, those might be two markets that you want to consider. But again, all of these markets, even the ones I omitted, are worthy of consideration. I'm just applying my own criteria, my own research, but you have to do your own research. If you are going to invest in any of these markets, you got to get some boots on the ground to tell you what is going on in these individual markets. I recommend you even go visit them. When I just started investing in a new Midwestern property recently, I went and visited a couple before I decided which market to invest in. So hopefully that helps. The whole point of this video, the whole point of this list is if you're looking for affordable options, hopefully my criteria and my analysis can help you create a short list that you can do a deep dive on in the future. For BiggerPockets, I'm Dave Meyer, and don't forget to head to PropStream.com/BP to find motivated sellers nationwide so you can lock down your next real estate deal. Thanks for watching.